Welcome back. If you're just joining us, this is Capital Market Live on Channels Television, and the equities market have predominantly taken a bearish stance the past few weeks, closing positive last week, but the index has continued to drop below the 49,000 level. Investors out there are probably wondering if they should pull out their investments at this moment, but the trick is to understand how to trade in any market cycle and profit from it, so it's not all gloom for investors. Mr. Ambrose Omodion, Chief Research Officer, Invest Data Consulting, joins me in the studio to share a free or two. Good to catch up with you, Ambrose. It's always good to catch up with you. Ambrose, you heard the first guest. We talked about some earnings, we talked about some stocks, but all eyes now on the earnings season, the Q2 financial report. What are your expectations for that?
Yeah, I believe that the outlook for Q3 number or for Q2 for those that has much as year end will be a mixed performance. Those companies that have done pretty well in the first quarter, second quarter, we're likely to maintain that trend. But because of this increasing economic headwinds internationally and locally, there are going to be some sectors that will be affected with this movement, especially with the rate increase in interest rate. Right, that is one. Another one is this FS market has become also a great challenge for most of the companies that really import raw materials for their production. That means we're going to see a mixed number, and that number will impact our price because you don't give what you don't have. If I see a company bringing a positive number, they're likely to pay improved dividend at the end of the financial year. Knowing that the Q3 number is very, very important for any design investor, locally and internationally, know exactly what will come out from this company at the end of their financial year for this current year. But I believe that investors in the market should not panic because a trader and investor, they are two different people in the market. For investors, as you are seeing a value on your table because stocks are really low, looking at the market P ratio and individual stock P ratio, tells you that yes, the opportunity of capital appreciation. But for the earnings, you want to see individual company, what is their earning per share? Because no matter how good your top line is, if your bottom line is not strong, you won't pay much to your investor.
Speaking of earnings, with the current market and individual price to ratio earnings, what should investors be doing now?
Yeah, for those that are looking for capital appreciation, you will look at the P ratio to tell you, okay, you have a shorter period to recoup your investment. That is the simple meaning of P ratio. No, is it low or high? But for those that are looking at dividend payout, what to pay, you look at the earnings because the company have done well, as I've said earlier, they will pay good dividend. But if you're looking at, I need appreciation on this capital, this investment, what is the current price the stock is selling? What is the in between the low and high? Where is the company? Because I said in one of the programs that any day market close, the close price is very important for the day and for the week and for the month. That means for you at any time, markets are closed on Friday. Sit down and look at what is the close for that day. What is the company high and low for the year? I'm not having high and low. To do is high and low. To know where the company is. If the company is selling at a discount, you will know yourself that it's selling apart from what? From the real value of the company. Like what we saw in the life of GTB recently. It was kind of a divergence between the real value of GTB and the market value. And now you can see that also converting back again after we saw kind of divergent. So that's how to invest for investors and also for traders. But for those who want to invest for dividend, we wait to see the number before you start invest. That's why they're waiting for third quarter. But for a trader like me, I don't need to wait for numbers to invest. I would have positioned ahead of the numbers. You decide to trade in this kind of very environment. Don't say because market is bad, let me just sit and be complaining. No, there's still opportunity in the market so that you take advantage of that sentiment in the market, either positive or negative, because there must be activities on your chart. That is why you must combine your fundamental take analysis to make what informed decision.
So you're talking about informed decisions, and you're the expert here. What's the place of knowledge or intelligent investing in the market? Now, how do people access this? How do they take advantage of it to make strategic decisions to be able to profit from this bearish cycle, from if it's a bull or bear market? So they're not wondering, I need to pull out and make losses in this, especially in these times.
Actually, when market is bullish, anybody in the street can tell you, go and buy stock, you make money. It is not the market is down that those that use knowledge or that has also tools. Knowledge comes by knowing what to do. Also have to guide you. Many players in the Nigerian market don't have the tools. When I mean tools, for you to really play effectively as a trader, you must know how to combine your technical and fundamental For most of them, they rely more on what? On fundamental. And fundamental that a stock is good. To know the right price to buy that stock or to sell, you need what? Your technical angle. That's why knowledge is key. You need to up your game. If you really want to have financial freedom, you must start with what? The knowledge aspect of it. Because anything we are doing in life, we are doing trial and error, you will make no progress or successful. No, you need to train yourself. That means any trader or investor in the market to up their game, not just calling your broker. Your broker, yes, but it's your hard-earned money. So that you must have an idea or insight to where you are putting your money so that you make informed. That's why in any market cycle, like I said, even there is crisis, like people are complaining that, oh, everywhere, if you look to we're having a war in Ukraine and Russia, if you come back in the FS market, is heating up our economy. If you look at interest rate globally, which World Bank and the IMF are complaining that if there's not taken, you might lead the global economy to a recession. Back home here, because of also our high interest rate, we're also afraid that the positive GDP we have seen first, second, if they're not taking, we must start seeing a contraction. Because if you look at the monthly, call it potential margin, apart from the workforce, September was a bit up, marginal. But if you look at it, that means in within this last quarter, we saw kind of a mixed trend on the potential margin. I tell you that it's up and down. That's the thing that the high cost of funds is already hitting the economy. I mean, this guy is not taking. Might see go back to recession, but I pray that won't go back to that recession because if it happened in this admission for almost 3 times in and out of recession, it's not a good thing for the economy. I believe that now the investors know where to go because the intervention that the CBN did earlier, after during the COVID-19, there are some sectors that are still and enjoying that, those interventions because it's still on single-digit interest. That means we expect those sectors to release a better number than those that are approaching the banks for almost 30% interest rate. But if you are still having one digit interest, you should feel that your results should be better. For me, this is what you have to look at. Where should I go? And also, naturally, policies also tell you where you should go because policy will also impact performance. We see what is happening in the banking sector today. Despite cost of funds, at the end of the day, we see a net of positive level for banking sector because actually they renegotiate their loans with their creditors on what to do. Now that, yes, we increase the rate, automatically more funds for the banks to make money. Okay. And also at the same time, because of the increasing rate, that's that TP already is high. Bank can equally put money there and make money. That means for banking sector, I expect to see a better trade number from that sector. Yeah.
We're talking about numbers now. We've seen mixed reports or results from the early filers, such as United Capital and Girigu, as we mentioned. What do you think investors' reactions will be, especially ahead of inflation numbers dropping next week?
Actually, for the inflation number, it's like a past. It's just tell you what has happened. We're looking at the future. For me, the inflation will tell us it will inform whether the MPC will adjust rate. Coming the last MPC for the year. They come in November. But for the result I've hit the market so far, I would say this mixed number is giving investor an insight what we should expect going into the future. But that, the consumer price index will shake the market when it comes. But if there's a slight decline from the expectation of the figure, that would be good. But if there's also a marginal increase, it will balance. That means in the next MPC meeting, we expect that there will not be either they leave the rate unchanged, flat to see what they have. But if there's a kind of a huge increase in the report, the inflation data, they might likely also increase rate again. Because I tell you, the way this recent CBN governor is like different from the CBN governor before. About like 2 years, our rate will remain unchanged for 2 years. Thus, in the last 6 months, we have seen almost 3 times the change in our rate. For me, I believe that if we see another hike, re-hike or increase in inflation, we might see another increase in rate. But for the figures that hit the market, the earnings that came to the market, I would say it's a good start seeing what UCAP just released to the market.
United Cap was quite impressive.
That is a good number. And this is what I'm saying that will attract back the institutional investor. Generally, now that we're seeing that the government is making to make move to do what we call debt reconstruction, that also was to threaten them that they need to also diversify their portfolio. And seeing impressive earnings like this, that money from UCAP, that was to enter the COP. Dividend yield already is high. And even though they paid out 150 what they paid last year at the current price, your dividend is almost 18 to 19% for me. It's a good one. That means the number shows that where the company is going. If you want to see that you interest investor in that company, that show that company is well run. Look at the profit margin for this company. Look at almost 53% profit margin. It tells you that this company will have a lot of confidence. They know the kind of cost they are using. For me, these are what investors look at. Because if a company has good cost efficient management, they can pay out what they have because they know how to. For me, investors will look at that way. For those that are income investors, for we that also trader, can still make some money. Buying at 11 naira, looking at to go at around 15 or 16. It's a good for me. That's why I say whether the market is on a corrective wave, or but for me, the market is not bearish. I tell you that our market is not bearish for now, because until we lose up like 20%,
before we know that we are in a bearish market, but we are still in a bearish run right now.
It's a corrective market.
Are we corrected?
Yeah.
Are we corrected?
Yeah,
because are we going back to the 39,000 level?
It's a corrective way. We can only rebound any moment from now. And this anything we are seeing, we might see support in the next 6 weeks. Market to remain in this up and down, and that is why any season is a very good period for you to make money, because that period you see a lot of activity in terms of sentiment, in terms of psychology changing, in terms of fund coming to the market. That is why a good trader to take advantage of this any season to recover what he has lost before now, and also create more wealth.
Thank you so much, Ambrose Omodion. I hope the market doesn't lose momentum as the earnings season kicks off. Ambrose Omodion, Chief Research Officer, Invest Data Consulting. Thank you so much for sharing your insights on the program with us today.
Thanks for having me.
And that's it on Capital Market. Do join us same time next week, and we'll Yvonne. Thanks for watching.